they're not signals. It's like you're seeing the market in color. Like if you're just looking at regular prices, you're looking at black and white. And then if you look at DeMark, you're seeing things in color. It doesn't sound very sophisticated, but you don't need to be very sophisticated. Any system is better than no system. And just using blind judgment or vibes it's coin flipping.
Today's episode is brought to you by Fintool, the AI junior analyst tailored for institutional investors. Go to the fintool.com link in the description to learn how you can add AI to your research process. Before we get started, I want to do a quick disclaimer that nothing we say here is investment advice. As well, nothing we say is marketing or advertising for Anthem Capital Management or any of their funds. Everything we discuss here is meant to be informative about the fund management industry. Welcome to this special Trader Talks edition of Other People's Money. I am joined today by Petr Pinkhasov, the CIO and co-founder of Anthem Capital Management. Most of the time on the show, I'm talking about the business side of investing, but today we're going to talk a little bit more about trading, a little bit more about markets. And Petr is somebody I've known for a while, and I couldn't think of a better person to come on and help the listeners of OPM try and navigate everything that is going on as we close out Q1 here in 2025. Petr, thank you so much for joining me.
Thank you for having me. Yeah, it's good to hang out again. We've known each other for a little while now. So, yeah, good to do something a little bit more formal again.
I know, right? Well, we worked together back at Real Vision. Every once in a while, people would join the team, whether they were on editorial or whatever, and you'd go look up the bio, and you had like a real trading background. So I was very excited to have you because we always had a mix of people, whether they came from finance or media or whatever. And anytime I could, pick the brain of somebody who had actually sat in a risk seat before, it was a lot of fun for me. So I was very grateful to have worked with you there and excited to do this now. So you've recently launched Anthem. We can get that out of the way, and we can get into some of the stuff that's a little bit more timely. Um, so you've launched Anthem. Can you tell me a little bit about how the launch is going and what type of strategy you run?
Yeah, sure. We started the seed strategy about a year and a half ago, and we did pretty well there. And that's my partner was also my first employer as well. When I left law school to because I just hated law school, I really wasn't into it back then. In 2013, I went to go join an RIA, and my partner David, he kind of hired me because he saw that I had like I was trading my own money back then. I was like a broke kind of law, law school dropout, and he saw that there was something there, and he kind of took a chance on me and hired me to go join an RIA back then. Long story short, we did okay together, and we stayed friends. And I transitioned off to do different trading roles or portfolio management roles or whatever currency trading roles. And I kind of reached out to him, uh, asking, "Hey, like." I kind of feel like I wanna get some money going. Other let's get a bankroll going. Let's get some investors here. I just wanna do some managed accounts, and he kinda introduced me to a few people, and we did pretty well for them. And that was basically the seed strategy for Anthem about a year and a half ago. And our official launch date was May 2024. So we're coming up on almost a year now of a live track record. And yeah, it's the markets have been pretty exciting. And as a trader, it's definitely volatile. Things are transitioning and changing very quickly, but it's an exciting, time to be a trader, basically.
You can correct me on where I'm wrong here. I'm sure I will be, but when I think about you, I think about you as like a trader's trader. Like when people sort of imagine not a day trader, but like somebody who takes a sort of multi-week view on, whatever asset is moving, like if that is where the action is, like Petr is going to be there.
I think that's a pretty good characterization. Yeah, you know, my philosophy for markets, I think, has evolved over the years. Now it's more of how you would describe it. I think in the last 10 years or so, it's definitely gone away from being really technical, short term oriented into something more of, hey, take a view and then use the skill sets that you learned from technicals and microstructure to help execute. But you got to use your head and formulate a view, and then when the facts change, then then you can change that view. But and then you always got to manage your risk accordingly the entire time. Think about path dependence, all that good stuff. But yeah, I mean, think take a view. Um, Sometimes, yeah, it could be if things are moving really, really quickly. Day trading I think is fine when things are volatile. But yeah, I think that sweet spot is definitely we've what I'm really looking for is a divergence between price and narratives. And if something is priced that's not really reflected in objective reality, or the market has something wrong, and I have a chance to take a view on that, that 1 to 2 week time frame is kind of the sweet spot for that sort of thing, especially in like stuff like interest rates. That's been you know the golden pony for trades like that over the last year or so.
Okay, now I gotta ask, like, do technicals work? Because if you are following technical analysts, they'll tell you, like, yeah, it's the only thing that matters, and then there's an entire group of people who are like, it's the male equivalent of astrology. So which is it?
It's definitely the male equivalent of astrology, but that doesn't mean that it doesn't work. Because you know me, and maybe some of the listeners might have followed me before on Twitter or something. I don't have like a big following, but maybe one or two of, and they might know that I'm a big fan of the DeMark indicators. That's definitely astrology for men.
Is
Um, do I use it for execution purposes? Sure. Does it work more times than it doesn't? Sure. Would I, if I could go back to my earlier, more formative years and unlearn a lot of things about technicals? Yeah, I think I would. Um, but having said that, knowing knowing how prices should move and having a game plan and all that stuff, you can only learn that stuff if you're like a technician, really. There's pros and cons to looking at markets in such a binary way where you think price is all that matters. The pros is you become supremely disciplined on the risk management side. The cons are obviously you're like reading tea leaves.
and
Uh,
ignoring, like, so many of the inputs.
yeah, yeah. So it's you know, we all learn things, and maybe I still don't know if this is absolutely true, but I'm sure it's a combination of both. Um, you gotta, uh, but technical. When I think of technicals, I think of just really rudimentary sort of support resist like, even even back then, like, descending triangle patterns, like, all that stuff, I never even fall, or, like, Elliott wave, like, why does the market have to move on a 1, 2, 3, 4, 5 cycle or ABC waves? Like, I never understood.
But DeMark, though, like, this is where I'm lost on it, is like, you're like, Elliott wave, that's nonsense. But DeMark, you're like, now that there's some truth to it. So, like, how
Yeah.
are you looking at it purely as a statistician? Like, there
Yeah.
does to be statistical strength in the DeMark indicator, and in your, looking back at these other indicators, there just isn't, that relationship isn't there.
Yes, there is some statistical significance on the DeMark side. It's not great, like, and I always described it, it wasn't me who described it, but I forgot who said it. Um I think it was, like, one of the guys from Omega, actually. But anyway, they said, "When I use the DeMark indicators, they're not signals. It's like you're seeing the market in color." Like, if you're just looking at regular prices, you're looking at black and white, and then if you look at DeMark, you're seeing things in color. And that's because the DeMark stuff, all it does is overlays sequence counts on top of, prices. So, oh, this is like the 13th time that we've closed above or below the price from 2 bars prior, and usually when you get to the stage where that's happened, people are frustrated, and you tend to see reversals, and there's some statistical truth. I don't know, well, I do know maybe 13 is not the exact number, and maybe there's certain conditions that it works better. Maybe 9s are not the number, maybe it's, 8s, all that stuff. So there's room for refinement on all this kind of stuff, but the gist is mean reversion does seem to work, and the DeMark indicators are complementary of that. Now, is it the DeMark indicators or is it just mean reversion? That's that of course is is up for debate. But again, if you have somebody like Steve Cohen, who's partnered in DeMark Analytics, and you look at some of the Point 72 training videos and you see some of their analysts have DeMark up all the time. Well, maybe if the PMs are looking at it and are allocating at prices where there's exhaustion, it just like regular support and resistance, the stuff becomes sort of self-fulfilling.
Well, I know that, actually Tom DeMark threw out a first pitch at the Mets game. That's how much Stevie loves him. He gave him,
That's
like, a
hilarious. I didn't even know
yeah,
that.
he gave him a lifetime achievement award. You know George from Real Vision?
Yeah, George S,
Yeah,
yeah.
yeah, Raul got invited to the thing, and he brought George as his plus one. So,
That's amazing.
yeah, yeah, so
Ah,
he
I
got
didn't
to
think
go.
so. They didn't invite me.
I
They
know,
know how
right?
much they love DeMar.
It's nice to know where you stand, right?
I
Uh,
know.
um
But George and I are friends.
But, yeah, certainly real people follow DeMark. I guess, where did this come from? I know that you spent some formative years, working for Niederhoffer, sort of, like, famously focused on these, um, eh, obscure signals, I guess, would be the way to put it. I would love to hear about, like, that experience and how much of the sort of, like, early trading philosophy you had was influenced by mentors like that.
Yeah, Victor was, it was a big change for me because I went from, like I said, the more formative years, it was more technical, and, while I was working with my prior partner at the RIA, he handed me Victor's book, actually, and I read it, and I fell in love with Education of a Speculator. I thought it was just a really beautiful book and, really transformed the way I started to think about markets. It transformed me so much that really wanted to start learning how to backtest all this stuff and started to learn how to code. So for that year after I read the book, I was recreating a lot of studies in the book. Anyway, long story short, I somehow found his email and I emailed him a bunch of studies that I recreated from his book. And he liked it so much, he invited me out to New York to have lunch with him. Um, and that was funny because it wasn't lunch. He took me out to see Fantasia, like the in Lincoln Center, like play. And I was just and I had a seat like so far away from him. He kind of just put me somewhere like and I couldn't find him after. And then I had to like find a cab back to his place after. It was very funny.
What do you mean you couldn't find him? Isn't he, like, 6'10"?
Yeah, and wears a pink like hat all the time. Yeah, but I
Yeah,
still
what do
couldn't
you
I still couldn't find him. Uh, anyway, we hit it off. Yeah, and, I went there with an open mind, and it was very transformative with I before that, I was young, I was in my early 20s, I saw people, do pretty well in markets, but I've never seen somebody just, like, be able to bankroll, you know I'm not saying I don't wanna talk about, you know, uh, capitalization here, but I've never saw somebody be able to, like, accumulate that much a lot of money really, really quick, and I was blown away by Victor and by his, like, finesse and swagger in markets. It was, like, a whole new revelation of how somebody could look in markets, and he was pretty short-term oriented and very quantitative, and we spent, 4 years or so working together, building these shorter term systems across global macro assets. And, yeah, it was very transformational to how I think, and I think for the next ever since then, I've everything I look at, I have to test. I have to look at things from a quantitative perspective. If somebody just throws out some cliche about the markets, like, "Oh, well, it's Friday and the market's down, so, everyone's, hedging some" it's like, "Well, did you test that?" Like, why are you just saying that? Because I realized, it's not a professional thing to do, to say things that might not be true, especially grand overtures about market prices and market movements that might be cliches that you might need to do the opposite of. So, um, yeah, I found very transformational for my philosophy of markets.
What are the
Yeah,
sorts of things that you were back testing and then, potentially putting into live strategies while you were there?
It was very, short-term oriented, like multivariates cross-asset looks. So we would be looking at, I don't wanna give too much away, but I'll get simple, maybe like, well, let's say it's, something as simple as, it's a Friday and the market opened lower and the bonds opened higher and the market went down for the first 2 hours and the bonds went up for the first 2 hours. Like, if you don't know that, I think you're at a complete disadvantage in short-term trading. Like, if you don't have every time that that's happened, in front of you with statistics and a very detailed, explanation of what you should expect for the S&P, for the bonds, for, whatever you're trading, um, that was the foundation for trying to build systems from there. Because it doesn't sound very sophisticated, but you don't need to be very sophisticated. Any system is better than no system, and just using blind judgment or vibes is it's coin flipping, and sometimes better to have some sort of historical precedent for whatever you're doing. But to answer your question, we weren't, we were taking the research and we were hand trading the stuff. So we weren't black boxing any of these systems. I know that some of the Victor alumni, very successful CTAs. I'm sure they have automated strategies that they might have taken, and evolved some of the things that they learned with Victor, and I'm sure they're doing very, very well on the automated side. But when we were there, we were still, hand trading, all that stuff.
And do you still hand trade today, or are you automating?
There's some automation, but I would say because, the time frame doesn't require me
Yeah.
to be automated, and when the facts change, it's usually not price related. Um, so to take those qualitative variables and formulate some kind of grand, trading AI be a daunting task. So yeah, it's there's some automation on some of the quantitative strategies that we do now, but for the multi-week sort of things that we were discussing before, we're trading in and out of positions, and yeah, that's a slow moving train.
Today's episode is brought to you by Fintool, the AI junior analyst tailored specifically for institutional investors. Everyone in finance is racing to figure out how AI can best be integrated into their investment process. And one of the biggest areas that is catching on with institutional investors is analyzing SEC filings and earnings call transcripts. Fintool takes hours of combing through filings and transcripts down to seconds, whether it's comparing the current call with prior quarters, finding that sneaky change in the footnotes, or compiling the key facts into an easy to digest one pager. Fintool is saving you hours so that you can go deeper and search wider. Because your time is better spent turning over more rocks or researching the things that AI can't. Don't just take my word for it. Kyle Mowry of Grizzly Rock Capital, who appeared on OPM earlier this year, has become a power user of Fintool. So go to the fintool.com link in the description and make sure to check out the testimonial from Kyle to see how Grizzly Rock has transformed their research process. That's fintool.com. Now let's get back to today's episode. So how did you get into the managed account world? And does it translate well to trying to launch and raise a commingled vehicle? Do you find that the people who are interested in managed accounts are also interested in a fund?
When I was at Real Vision, it was interesting. I in 2018, 2019, I left. I was doing consulting for one of the biggest jewelry companies in America, and I was a FX trader there. We were automating a lot of their currency risks, and I kind of realized like I don't. Something happened after 2018. I think I got this was like 7 or 8 years ago. I saw I had an experience on a prop trading floor where I saw a lot of really, really successful people from the pit sort of, I don't know, they became kind of like dinosaurs. And I got kind of scared. It's like, what if I just stop? Because it's speculative, it's gambling, and some people are good at it, some people are not. But you never know. One day you might not have the mental fortitude or aptitude to continue to do this. And I got pretty scared in 2019 that holy, this might come to an end, if AI takes over and markets are flat for the next 50 years, how am I going to make a living? I went and I did an MBA right around the time that COVID started. Um, uh, there's a school right by me, Babson, next to where I grew up, and I've always kind of looked up to that school. And they kind of, and I was never a good test taker too. I sucked at test taking. The only test I ever did okay at was the one that got me into law school, like LSAS. But like, I took the GMAT, and I'm just like, yeah, it's hard for me to be a really good test taker. So I was not going to get into Harvard, I don't think, with my GMAT scores. But I got into I got into Babson, and
You're selling it short. It's a good they have a really good, like, entrepreneurship
yeah, yeah,
program
for
there.
sure.
Yeah,
For sure, and it's, like, close by, and,
yeah.
I grew up in Needham, right next to Wellesley,
Mhm.
so, yeah, it was great, and, from there, because I wanted to take that transition away from, kinda just being a independent kinda trader, and I did have some experience trading other people's money, in a prop function or whatever, and I thought, "Well, let me try the managed account side," and, at first it was friends and family, and then the friends and family introduced me to some other people, and, I really liked it a lot. Um, Now, having said that, partners and investors, you have to be very intimate with them. You have to understand them very well, and they have to understand you very well, and I didn't learn that until much later on, that you really want great partners. You don't want somebody who's gonna, they see you're down 3% mid-month and then start to bombard you with questions and start to, try to dig in because maybe they're down too, and maybe they're trying to get some sort of misanthropic, sort of gain through cutting your skin a little bit. Like there's people who do that. And then I've had to let people go. I'm like, I don't want to deal with you anymore. Um, so does it translate into the hedge fund world? The hedge fund world, I think you have staff more. We have a investor relations person, chief of staff who deals with questions, concerns, all that stuff. But for the most part, we're looking for partners who understand our strategy, who understand us, who understand our philosophy about markets. And I think that's very, very important to be selective. I know like some people may be getting into finding, they just want money. They just want money to trade with. They want investors. Um, that's, you know, the, we all will learn eventually that not all partners are created equal. And I think that's been the biggest sort of thing
Well,
that I've,
it's no, it's this weird dichotomy where I think just about everybody that I've had on the podcast kinda says the same thing, but then they also, if you ask them, like, gun to your head, somebody's willing to seed you with, like, $100,000,000, but there's, like, all these constraints on it. They're like, "Take it. Take the 100." Like, it's simultaneously both things can be true that, like, it is
yeah.
incredibly hard to get, like, that type of seed capital, but at the same time, like, you know once
That
once it's less of a problem, it starts to matter a lot more. But let's take a turn then and talk about, like, selling your views. You had a I forget what it was called, but you had like a
newsletter.
trading room and a newsletter, where, you would talk about, the trades that you're putting on, when you were trading your own capital. Like, did that help you to, you know, crystallize your process? Did you meet investors through that? Is it just a good way for people who are trading their own money to supplement while they're trying to build?
I think if you're good, it's a incredible business. It's a very, very difficult business, and I think, yeah, I've been on the buy side for a while, and then I've had moments where, hey, I want to take this skill set. I think I'm good at predicting markets, and I want to subsidize my day to day activity with steady income of sharing ideas, and I think that's fine. Um, but I think to be really, really great at it takes a lot of work. Um, it's very difficult to sell confidence. You know, you can't sell conviction. It's extremely difficult. And there's certainly some people, I look at someone like Citrini. I think he does a phenomenal job with the thematic stuff. Um, I don't know how he does trading wise, like for whatever for P&L, but I know that I don't fade his ideas necessarily. Or like the macro alpha guy, I think he started his own hedge fund
Yeah.
recently or something. Um, and again, I don't know his P&L. I think I th so there's a big difference between obviously between, investing and sharing ideas. One will drive you crazy, one others will drive you crazy. And, yeah, is it good for getting your name out? 100%. Is it good for meeting investors? I don't know. I had a close to like 100 subscribers, I think, at my peak on a monthly basis. And while I made really, really great friends, some of the, I would go to Europe, put a tweet out. And I'd have like 4 or 5 of my old subscribers reach out to me. We'd go hang out, have a beer, have a coffee or something, wherever I was. I made some really, really incredible connections. Did that translate into AUM? I don't think so. Um, but on a personal level, I think it's fantastic. If that, I know this isn't like a personal level podcast, but I thought it was a very fulfilling thing for me personally, just because I really enjoy expanding my connections. And the thing is, like, on the internet, I think you have to be authentic. I think you have to be yourself, really, and naturally, you're if you're yourself and you're not pandering to anybody politically or whatever, you're gonna attract people who you're gonna like as well. And that was the biggest thing for me from the newsletter. It made good money, but it really expanded a lot of my connections and network in a way that I never thought that it would have. But it didn't necessarily translate into more money for a hedge fund necessarily.
Yeah, I mean, some people like there's two schools of thought. One is like just get as much stuff out there as you can so that you get eyeballs, build your name. The other is, if you're so good, your ideas are so precious. And nothing needs to get out there. And I think obviously like there are certain things that where that is true, but or the other idea is like, well, if people can just buy the ideas, well, why wouldn't they give you any money? And like
Yeah.
as you said, you can't sell conviction, and that is like one of the key points to it. Like so many people are like they follow the model, they love the model, whatever it is, but they don't have the constitution to trade it, or maybe they don't have the systems or the technology or the know-how to trade it, and eventually they're
Yeah.
just like just take it. Like, you just take this for me. Like, I don't wanna I'm tired of the headache myself. And,
Yeah,
like
that's why I always thought the whole, you have to be secretive about your strategies. I always thought that was bullshit. I never understood that. I think markets are too transitional and they change so quickly that even if you have a really, really I'm talking about general strategy, not, okay, someone's taking advantage of the options Indian market that's gonna profit them billions of dollars. Okay, fine. But that's parasitic in nature, you know? That's not speculative. If you have a speculative strategy that does pretty well, and you came to that conclusion through your own mental, facilities, that's very difficult to give to somebody else, and they're gonna start to extract profits the same way that you would. It's just it's you can't download information like the Matrix where, like, you automatically get to the same point that somebody else does. I know you can we speak the same language, we speak English, we try to convey as much information as possible. But at the end of the day, conviction is conviction. And when the idea is, it's like, remember in Inception, like it's that same kind of thing. It has to be like a natural idea formed in your head to have the maximum conviction. So, yeah, I always thought that the skill set of a trader was very important in that regard because you can give somebody a winning strategy and they'll still somehow, not take it to full advantage or somehow end up losing money. Who knows?
it's like analyzing 13 Fs. Like, it's kind of backward looking. It's not always as we know, like, you could have whether it's like total return swaps or you're trading like non-US securities, like there's so much that goes into a portfolio that's like not 13F, but people still like look at them, they're like, oh, so and so must be up like X%. And sometimes that bifurcation between like the public facing ideas and the reality of the track record is like that's the trading skill. Like so and so publishes their biggest ideas, and then those ideas go through a big drawdown, and everyone's waiting for like their monthly numbers to come out so that they can dunk on them for being down. And then they like eked out like a slightly positive return when you know that they have this big exposure to this thing. I'm like, yeah, that's the skill of the man in the seat right there. That's
100%.
why people get paid well for this business, is because they're not just the sum of their ideas, they're the sum of their decisions. I love when I'm like waiting for somebody's numbers to come out and I'm like, oh, they're gonna wear like a pretty bad red number. And then it's like, oh wow, like they were flat or only like
Oh,
barely.
I know that feeling, because I'd like I have a couple of friends in the hedge fund business, and I know some of their positions going into a month, and then I see all of them just, like, go the other way, and then I see them, like, flat for the month. I'm like, "God damn, I am proud of you, dude. Good job." Because you know their exposure and, it takes a skill like, it's really tough. It's really tough, especially when you're in the hole and, you're dodging bullets and you have to make hard decisions when you're already down in a drawdown. Um yeah, I mean, you feel like the world is ending, your career might you have career risk and everything. Um, there's a lot to be said for people who can eke out a profit, when, um, their their views are going the other way on prices, so, yeah,
Well,
kinda
yeah.
how I feel this month too.
Well, I wanted to get into that a little bit because, we were supposed to do this a couple weeks ago and you're just like,
I know.
"Dude, I can't do it today. There's too much going on." I think we were scheduled for, I don't know if it was the day that the market was down like 4% or something like
Yeah,
that,
or
but
something like that. Or I think it was I don't know what it was, but I know that I didn't sleep the day before, and I was like, "I can't do this right now, Max, I'm sorry."
yeah, yeah. But so like when that happens, when, you come in, it's the new bull market, it's the new Trump bull market, we're long and strong, crypto's going to the moon, all of these things are happening, and then suddenly big reversal, like how you're taking it on the chin. Uh what do you do when you're in the hole like that?
Well, I think the most important thing is, you can't panic. You have to understand that, these things happen. Um, and I think you have to look at the situation objectively, like, uh, lay out all the facts. What has changed? What hasn't changed? Um, obviously, if you have big positions, and they're not working, it's time to, at the very minimum, reduce them by half because there's a good chance you might be able to buy that half back at a much better price. So those are the 2 things. Number 1, I would say the first thing is probably without even think I'm guilty of not doing this sometimes. Really great traders kinda just do it, without any afterthought, because it's super easy to add to losing positions. It's pretty difficult to scale out a half, wait and see how the market develops. And objectively, that's always gonna be a better call, and I try to stick with that. So the first thing, is, yeah, try reduce the big positions, unless they're the kind of positions that might profit off this kind of environment, then, maybe keep them on or maybe even make them bigger, who knows? I think everything needs to be judged on its own merit, and then, yeah, reevaluation of the facts. What has changed? And maybe, we can go through that, mental exercise for tariffs right now,
Yeah.
what has changed, for tariffs? Well, they're certainly bigger this time around. Um, Trump 1.0 tariffs, markets were a little bit volatile, not as volatile as this time. We just had a 10% correction off all-time highs, small caps, like 15% correction off a 52-week high. Meanwhile, you know, um the difficult part with now is how much of the last decline was tariffs and how much of it was Tesla pulling back from 500. How much was it Palantir coming off of 130 or whatever it was? How much of it was, ARK making a 52-week high and all the meme stuff coming off? Very difficult to say. I wanna attribute 30% tariffs, 70%, really stupid valuations in the short term. Um and then now I'm reevaluating that because that was true 2 weeks ago when you could have bought the dip, when Tesla, got down to got down to 150 times earnings or whatever it was. Um, and but now it's, as we're approaching that April 2nd deadline, and it's Friday, it seems like the markets really, really care about the tariffs, and it wasn't so much about, the meme stocks so much anymore. That's what it kind of feels like. Right.
No, no, I hate these, like, tropes, but I think back to Trump 1.0 and, there was a sort of, like, economic orthodoxy consensus of like, yeah, trade wars are bad. Like coming into it, and it's the sort of wall of worry versus slope of hope trope. And it's like last time around, everybody kind of agreed. It was like, well, yeah, we're going to be in a trade war. Like that's going to be bad for prices. Like this time, we kind of all like tricked ourselves into thinking like, no, no, like tariffs like don't actually work like that. And so like the issue is last time we were like, this is bad economic policy, and every single time something good happened, we were able to like rally on that. And this time we kind of like came in being like, it's not going to be so bad. He doesn't really mean it. And so like the starting point is very different. Like the policies are somewhat
Yeah.
similar, but I think, we kind of all agreed the first time it's like this is bad policy. And this time it didn't really feel like we had that consensus. And thus there isn't the wall of worry to climb. It's the slope of hope to slide down.
The starting conditions are completely different. I think you're absolutely right there. And from a positioning standpoint, the fact that this happened right off a fresh all-time high, uh, very, very different. And like where rates are completely different to where
Yeah,
rates were
true.
back when Trump started.
So then I guess as you're reassessing, like, what is your view going forward? I mean, I know that you like generally like you like to be long, not that you don't like get short or reduce your exposure,
Yeah.
but 4 out of 5 years, it goes up. Like it's the only game in the casino where you get to bet with the house. Um,
Don't get me wrong. I make money in down markets sometimes too. Like I don't know if I should talk. I don't know if I can talk about performance, but I don't know. February, the market was down. We were okay. I don't want to say numbers, but I'm just saying that
yeah,
well, like our strategy does tend to make money off short side, but February was so easy. Like you could have shorted any stupid stock that was up like a stupid amount, even on a little bit, and hedged out your long exposure, and you probably did okay. March was tough because the market was already down coming into March. It's already pulled back. So obviously, as a trader, you cover your risk, you cover some of your shorts, you start to buy into stuff that you like, and if you do that too early, well, then you're effed.
yeah. So are you as you're reassessing, the tariff risk, like what is the conclusion that you're coming to?
I think a lot of it is already priced in. If you look at the numbers, we just had a $5 trillion pullback in global stocks on okay tariffs, whatever. We import about a billion. I mean a trillion. And what's whatever the 20, even if it's 50% tariffs on a trillion in imports, like the market reaction seems a little bit insane now. Bonds coming off this week specifically was a little bit weird, especially as the market was coming off this entire week. I thought that was very strange, but then I started to realize that, well, maybe it's because the core PCE print was the fact that we rallied today in bonds like almost a percent in the long end. I don't know I don't know how many basis points we rallied, but I mean, bond prices rallied
Yeah.
almost more than a percent. Um, I think that basically said that all week, um, it cared more about this week's print than it did about tariffs. Um, the fact that we reversed basically the last 3 sessions. So market prices are weird. They're telling us a bunch of different stories, and they're making lives for bulls incredibly difficult. I just don't have a super strong opinion. I think you have to try and be a little bit long into sort of panics and sort of big declines. But would I be like, you know, pounding the table on just buying as much stocks as possible for Trump 2.0 and make America great again? I don't know. I don't think so. I think it's different this time around. I think they're very clear on their policy that, they're willing to take pain basically. And it's very clear that the Fed's independence is very important, and I don't think they're going to be bullied or pressured by, uh, the admin. Uh, and I think they're doing a good job of combating inflation for sure. Um, you could say that was it naturally bound to happen even without rate rate hikes? Probably not. But at this point, I feel like that they're probably approaching the apex of economic risk with keeping rates this high for some, especially with this level of uncertainty. Um, it feels like we're getting to that, and that's what stocks are caring about at this point. That's what it really feels like. We're just approaching the apex of uncertainty, economic uncertainty with high rates, and the market's finally starting to pull back. So uh, it's a very, very interesting time, especially in a world where like the greatest advent of productivity is being released every single day, like AI. It's the most deflationary thing you can possibly think of. Um, yeah, it's a very, very interesting market. Not one that I'm like fully understanding how to trade in the short term, but I think higher time frame is going to provide some really, really excellent opportunities.
So are you a seller of rate cut expectations? Like if you believe that the Fed is going to cut twice this year, 3 times, maybe more, like, do you think that that's maybe a bit gung ho? I mean, we just got inflation today, came in a little hot.
And but the bonds rallied substantially.
I know, right?
Yeah. Yeah, that's the kind of that's when I alluded to earlier when I said treasuries and fixed income provide the greatest divergence between reality and expectations. That's that example, I think. You come in, bonds are down 4 days in a row when the market is down, um, into an already expecting hot print, and then the bonds completely rally.
Well, everyone's just waiting for the uncertainty of what the print is to buy, right?
Yeah, yeah,
They're
maybe.
like, "Oh, we're gonna have a hot print, so let's just wait to buy because it's gonna be
Yeah.
better." And then everybody had the same idea, and you get the hot print, and bonds rally.
For treasuries, you always have to take the other side of, especially when prices go one way. Like, the greatest trade ever was selling bonds right as soon as they announced rate cuts back in September of last year. That was, like, one of the best trades ever.
Yeah,
Uh,
I was on the wrong side.
and I was pounding the table. I was like, every day, I was like, "You," like, not only was the DeMark stuff, it was just very, I don't know, because as soon as they announce rates, what's gonna happen? Well, the economy is gonna start to pick up a little bit, and the bonds are gonna see right through that the first day, and, anyway. So when you get one-sided opinions, and that can happen in, like, the higher time frame like we saw back in September last year, and it can happen over a 3-day period like we just saw in the last, few days, so um, that's the kind of trading, I really like to do. I don't really try to cement myself into a fundamental view on interest rates necessarily. Just because the Fed is their slow moving train, or a big, very large ship. Um, so, but with stocks, maybe I do have a bias to the long side. That's not to say I don't hedge and I try to make money on shorting. Um, But in general, there's just so many things working for, the improving state of the world, regardless of what your political affiliation or cult is. There's so many things in Western society that are improving in the medium term. Yeah, there are definitely some, worrying things, but, I think we're going through a transitional period. We're about to enter an extremely productive period, and we'll see if that's true, but, it's not really gonna matter if there's gonna be a recession, so.
Yeah. Well, I mean, that's like we've been talking about like what's driving the market lower, and we haven't even talked about like the underlying like economic strength at all, which
Yeah.
has been, flashing some light. So do you think that you said, before you're like 30% tariff, 70% valuations, like if you were to say, some of this hiccup in March, like what percent tariffs, what percent valuation, what percent like real economic slowdown?
Real economic slowdown. Well, the bonds at the start of the month were thinking that it was real, but if you take a look at energy stocks, which you would think if there's any real concern about a recession, energy stocks would be down huge at this point. But hard commodities are rallying. and even oil is rallying. And you would expect, okay, maybe gold would rally, but in a recessionary expectation, you would think gold up, crude down, crude's up too. Um, and okay, look, core PCE is hot too. Look at Visa, look at Mastercard, trading very, very well. I don't see the red lights or flashing signals just yet. I think you've been seeing it for a while in housing. That data has been bearish for the last 3 or 4 quarters at this point. Um, and I'm really scared that it's gonna accelerate at this point. But I think consumerism as a whole is still hanging in pretty well. Is it outstanding? No. Um, is it worrisome? I don't think so. Um,
Yeah, that housing side. So I have been like, disclosure, like short housing stocks, and that has been working, and I've been making money. But you know, all good things must come to an end. And
yeah,
I'm with you. Like, I do think it looks like it might accelerate, but also just the natural mean
yeah.
reversion tendencies are so hard to fight. Like, what do you do when like I'm sure this is something you deal with a lot because you do trade this sort of like move exhaustion. Like you've gotten it right. You nailed the move and it keeps getting worse. Or it looks like it's not going to get better at the very least. But the technicals would say, hey, it's time for a breather in this trend. What do you do?
Probably I'm about to make some sort of regret. 9 times out of 10, my next move, I'm gonna regret it.
Well, you
Um,
you always regret
one
it.
thing
There's
you
only
have
2 trade sizes in hindsight, too large and too small,
yeah,
and it
you
all
have to
depends
do
on which way the trade went.
yeah, you have to do what you have to do. And you have to do we're all working with limited information and we're working with uncertainty. And I don't think you should necessarily take the whole position off or add to the position or something. But, I think as uncertainty increases, I think your position size has to decrease. It's just a very linear relationship between the 2. And at the very least, yeah, just decrease your position size and wait for things to evolve because maybe, yeah, you get a short-term bounce and you can reshort it. And look, maybe the Fed isn't gonna because you just saw core PC pretty hot, but the technicals look pretty oversold. And maybe the bonds are bouncing today, and maybe you'll see housing bounce for the next few days or next couple of weeks. That should be in the bingo cards of expectations. And then maybe reevaluates, uh, in a week or 2 to see, what's coming, or at the next Fed conference to see how the tariff developments were. Because these things are, the kinds of trades that you're talking about, they're super higher time frame. Like the big moves aren't going to happen in the next couple weeks. I would think on the housing side. But you want to have a position on the short side if things really escalate and go down. So, hey, you can cover half your position and then buy some puts. There you go. You get the gamma. You feel a little bit more confident. If it bounces, cool. You lose some of your premium, but you don't lose as much money as you probably would have. You know, you do so.
Well,
So,
I'm already in the puts, so,
it's-
um, I've moved on from the direct short to just the puts.
oh, there you go.
Um,
Yeah, I
but
mean, it's very intimate how we trade. I don't think there's a right way.
well, I'm gonna
Um,
take advantage of this, and I'm just gonna, like, ask you about my stuff, while I've got you. So I'm just gonna selfishly sorry to
Yeah,
everybody
I was
else.
gonna by the way, I was gonna bring it up. You started the whole conversation off with the short side, and I was gonna make a joke about how you're just a dumb bear. That's all.
I
I
mean, look, I just have to recognize that I'm trying to get better about, like, not being a dumb bear and buying stuff. So I did buy some stuff. I bought some Chinese stocks, and they're doing very, very well. So, I'm trying to at least have some long exposure, but yeah, like I told you, like, on Monday, I was down 12%.
Yeah,
So you can tell where my biases are. All-time highs today. Um, but, but what about outside of the US? Obviously, like, that was something everybody came in sort of thinking, like, it's the great US bull market. We had the Economist cover, just like the alligator jaws of, like, US versus the rest of the world. Um, have you been dabbling in some of these other markets?
I have, yeah. I'll go over okay, so at the start of the year, I thought the setup in the dollar was very, very clear. Um, it was short dollar trade, and all you had to do going into the year was to start to buy emerging markets in China and, things like gold miners and silver and all that stuff. And, we did pretty well in, uh, in January. Uh, and then now, like, that whole people I don't know what happened, but in the last 2 weeks, every single financial publication, because without any attribution to what the dollar is doing, has decided this is the end of American supremacy. There are no more returns in America. The tariff man is gonna destroy America, and Elon Musk is gonna destroy America too, and America is uninvestable. I don't see how that, you know, that change DXY going from 112 or whatever down to 103 is that was the culprit for all these things, Europe starting to outperform. I mean, do you really believe European demographics are improving so much over the US that the US is now uninvestable? You think that defense spending against Russia is gonna somehow revive the European economy? Like, absolutely not. It's so yeah, I think, like, you can trade the stuff, and I do when I have, like, a macro conviction on something like the dollar, but no, I I think just like in fixed income, when you see these divergence of extreme opinions, it happens on the allocator side too, and somehow these people convince themselves that the Western world is going to underperform, or the U.S. is somehow going to change its trajectory for the next 3 or 4 years of a 15-year secular trend of outperformance. I don't see that happening.
But you could have like a year. I mean, the at the end of the day, like it's flows, right? And
Yeah,
if
but I
if the
think
European if the Europe the ex-US money is able to convince itself of this narrative and start buying their own markets or their other markets and sell US assets for a while, like it could continue. Certainly could. Like it's all about the marginal dollar, right?
I think that's true. Um, yeah, yeah, and it is all about flows, and sure, like the Norwegian Wealth Fund could probably control the flows in the S&P for the next week or 2, um, based on, you know, a they're doing a 3% change in their portfolio from US to Europe, and that can have a material impact on our markets. But I like to think that markets don't work like that. I like to think that markets will eventually reprice to where they should go. And in my opinion, like, okay, if you if you're now getting into your I think you're already 4th or 5th inning. Okay, fine, maybe you make some money, but I don't think there's much alpha. Like, I think the alpha is done. Maybe both do okay, but maybe I'm wrong. Maybe I'm just a patriot. I don't know. I moved here. I have to make sure that I moved here for good reasons. So I have to
I
I
would expect nothing less from the child you know, Eastern Central Asian immigrant to, be nothing but bullish on the US versus the rest of the world, and I'm glad that, that bias is still holds true. I
guess so.
saw, like I saw a thing it's interesting though, like, the people in the world who, like, still kind of, like, feel positively about the US, and I've told this story for a while now, um, so who knows if the data, like, still holds, but following one of those like maps accounts where they have surveys and all sorts of things. And one of the ones I thought that was really interesting was they asked every country in Europe, like, if you could live in one other country, what would it be? And, like the UK, they said Australia. In Switzerland, they said Germany. In Germany, they said Switzerland, like Austria, like they said all these things. And Ireland was the only country that was like America, duh. And, you know, it's as an American, perhaps it's my own bias too, but, you like to see that sometimes. It's like, yeah, at least there's, like, one country out there that doesn't hate us, isn't rooting for our downfall.
No, I don't think anybody hates us. I think we're maybe they hate our leadership sometimes. or all the time, who knows, but I don't know. I like to think people are individualistic and, take take the merits of each other based on those things, not as a culture or a society, so
All right, we'll leave it there with you, Peter the Patriot Pinkhasov. That's my new nickname for you. Thank you so much for doing this,
yeah,
and
thanks for having me on, man. Really
yeah,
appreciate it.
hope to do it again soon.
Yeah, sounds good.
All